So, kind of picking up right where we left off with the last video. So, we got just other entry confirmations, We showed you kind of the main indicator, the main tool that I'll use to spot an area where price might react. So let's find another confirmation of it actually reacting. Actually, this will be a few. In this video, we'll kind of cover liquidity sweeps, equal highs and lows, high wicks, low wicks, and we'll kind of see how that's going. But this is really kind of the last, essentially the last, like, confirmation of price moving or flipping direction video that we'll do. Alright, now that I collected my, skip this song sucks. Now that I collected my thoughts a little bit though, get right started. So, I think the first one we're gonna do is like just a basic liquidity sweep. So, biggest thing about a liquidity sweep, we'll zoom in a little bit here. There has to be, now, just like the BOS, this is how I want to put it. This concept of a liquidity sweep can be interpreted differently, and it occurs on different time frames. I can't find the exact word I'm looking for, but we'll look at it like this way. Like, you see how there's this here, and then we go down for a little bit? Technically, you could say that's a liquidity sweep. Or a high wick, low wick would be a more accurate definition. So, blah, blah, blah. All of these three concepts, they're liquidity based, and I'm going to preface all of these by saying they do occur everywhere in the market. They are living in the market, I guess. That's how we'll put it. But to what extent are they affecting the market? That's a real question. So, first off, we'll kind of get into it. So, do some examples here. So first off, normal candle, whatever. And then we have this massive wick here that's literally bigger than the candle. Obviously, this is, once again, perfect example, because why the fuck would we show a non-perfect example if we could find that in the chart instead? So we'll show the bearish side of it and the bullish side of it. Same thing, really. So as of right now, no matter what, this is a high wick and this is a low wick. Like, this is a massive fucking wick, and when used with other confluences, it can help you formulate a bias / put in the trade. So, no matter what, like, this is a high wick, this is a low wick. Now, if this is a sensible area for price to retrace to, so like, say we have a session high, so like London high, Asia high, 4-hour high, maybe a daily high, maybe a previous day high, weekly high, monthly high, or one of these fib retrace zones we talked about, like the weekly 62, monthly 62, 79s, daily 62, daily 79% retrace, or like 127% extension / retrace. It's just an extension what we'd use for that one. Then, if we actually have liquidity that's avidly being taken out of the market, we have a position in market where it makes sense for price to retrace to and then like bounce off of, then that's what makes it a liquidity sweep. So, boom, we kind of already cleared that up. So while I'm thinking about it and while y'all are thinking about it, we'll get right into this one. So, is this a liquidity sweep? You don't know. You'd have to draw your fib, find out. But is this a high wick? Absolutely. These are both high wicks. Same thing with this. This, now, because of how low of this wick is, it likely is a liquidity sweep, but you can't confirm that. So as of right now, it's just a low wick until we can confirm and we know price wanted to seek out that point. Same thing with all of this shit. So, now that we have kind of high wicks and low wicks, that's the most important part. Because that's really what derives and forms like all these other ones. So now, we'll go here. So with our fib right here. Well, honestly, I really want to, so y'all don't get confused. I want to get away from all these lines. These are going to be important because of our multiple time frame analysis for next week, which I'll teach y'all about. That'll probably be one of the final concepts. We'll probably teach like SMTs first, and then we'll get to that concept. Because that's kind of like just a good way to wrap it up, I guess I would say. So, another thing, why have we not been drawing candle wicks on these examples? Because why would we make it more confusing? If candle wicks aren't gonna have to do with the concept directly, then there's no point in drawing that shit out. So to really, yeah, we'll show a perfect example actually right here. So first off, I would never take most of these concepts I'm gonna want an SMT for, or an SMT divergent, something like that, to really constitute them. But especially with this one, we're absolutely gonna be waiting for if we're trading blindly off of a liquidity sweep, we're waiting for something else. We're only trading off of it if we have an SMT on one of these two pairs or something like that. So as you can see, no matter what, this is a low wick. We have a pretty long wick. And then furthermore, what do we do with this low wick? We directly, so price opened here and then didn't go any higher, but we directly retraced on the wick, which is a low wick, to the 62% retrace zone. So that is pretty damn high confluence. Like if we had an exact retrace to the zone, not a little longer, not a little shorter, that plus an SMT, that's like one of the only scenarios where I would take only two confluences. And two SMTs are good confluences. This is kind of a weak one, but if we had that, that is one of the only scenarios where I would take more of a weaker bias trade. Most of the time, even with a liquidity sweep, I am going to wait for a micro break of structure or something along that context or one of our other confluences, just because it's not like the most confirmed thing ever. But based off of this, you can definitely make a case. Just based off of this, you put a trade in there. Obviously we are only going off of candle closure, so you'd get your position in here. If you really think that market is only going to go this low, which you'd want to wait for at least a micro break of structure for that, then you could enter with a partial here, which would be like, if you're on $1,000 risk, that's like an $800 trade. And then, so even if we slump all the way down there, chances are we are gonna at least get back up to that high. So just off of that microstructure, you're getting at least a $800 trade. And then this is kind of the exact way we would trade something like this. And then you take your other 50% at this 127% extension, which would be like $1,500 trade. So you're making two bands off of that, 2 times risk to the reward, just off of that liquidity sweep. So now this is kind of a liquidity sweep. And once again, this is going to be a perfect example, so this is going to be a really high probability trade. But this is kind of the big brother. Let me just make sure we're doing this according to plan. Okay, so this is what's called an equal low. So this is pretty much like the big brother of liquidity sweeps. In terms of strength of confirmation, we have first place would be an equal low or an equal high, either one, because that's price coming back to the zone and respecting it once again. So that's like pretty much 2 liquidity sweeps two low wicks, two high wicks. Like that's a really good confirmation. That's probably the only confirmation if I had that in an SMT that I wouldn't wait for a micro BOS or have to pair it with individual candle structure, because this is like a realistic example of what I would really. We'll come back to this point quick. No matter what, off that little liquidity sweep, I would use it to further my bias, but I would definitely make sure to like pair it with at least. Actually, no. We'll just go straight into this, Loki, because this will further my point. So then we get this liquidity sweep here. Then maybe we go up a little. We go up more with this candle, which is a pretty strong engulfing in this case. And then we once again retrace back to this zone. And we get another touch that's either close, so it could be like this, or it could be a perfect match. But if it's just close to that being a perfect match, then that's going to be an equal low, which, like I said, kind of the big brother of liquidity sweeps. And if we had an SMT, we would absolutely take a trade off of this, but we would definitely want to wait kind of. And I would say like if we get a third point where like we test this low once again and respect it, this is a really high probability trade. This is one of the times where I wouldn't need an engulfing. Like if we ended on this, I would likely take a trade just off of this candle alone because we respected this zone, which would be the 62% retrace. We respected that zone 3 times, and then we also have this this hammer here, which is a sign that price is going in this direction. So this is like one of the instances where we get an equal low, and then we also get this hammer candle. So the actual definition of it. So obviously we already did a low wick, high wick. Anything where the wick is long can be constituted as that and can be a weaker indicator that market's going to go in the opposite direction. And then we also have the liquidity sweep, which is a little bit of a stronger indicator than that. That's the wick going to that direction. And then there also being liquidity, like a retracement, extension, or a higher low that it took. And then we have this equal low, equal high concept. So an equal high or an equal low is just an area in market where price retraces to and respects twice. It's literally all it is. And that's why it furthers your bias, because what did price do? It respected that point. It didn't shoot right through the point. So you got to kind of think in this sense. If we respected this point twice, why would market go lower if market wants to? So we'll do it right here. We'll say this candle, for example. If market respected this point twice and didn't dip into this point twice, why would it go any lower? If it wants to respect this point, if it wants to go any lower, it's going to have to disrespect this point. So if it wants to respect this point, then it's likely not going to go any lower because it would have to go through this zone. So chances are we're going to go up higher. Now, the question is, how high? How much higher? Are we just going to go for a retracement here? Are we going to go back to here and establish an equal high? Or are we going to shoot up a ton? That's why it's important to know the context of liquidity and pair this with other confluences, because just because market's going to bounce off this point and go higher doesn't mean it's going to go a fucking shit ton higher or even keep the trend. So that's why it's important to pair other concepts like an SMT, shit like that. But now that we have this kind of learned, we'll identify a few. So This is more similar to W and everything. We'll give you a little bonus tip. That's kind of unpredictability. Right here, we have a low wick and a low. Right here, we have a high wick and a high. You could argue that this is an equal high. Another equal low. You see the wicks extend to the exact same spot. Another equal low. Gigantic equal high. And then low wick, high wick. Could argue an equal low here. Very low wick. That's likely a liquidity sweep too because of just how long it is. Then high wick, whatever. So now let's identify we'll identify equal highs first. So right here, great example. Pretty high confluence you can put on that. Great example here. But like you can see, doesn't go very far. That's why you need the other confluences. Good example of an equal high here. Blah, blah, blah. So now let's do an actual liquidity sweep where it would make sense for price to come back to. So, I sip my coffee. And we'll just do these concepts in context. We won't make it specifically have to be a type shit like that. But literally right here, pretty high confluence. We have a 62% retrace, and then we also have this equal low. That's a pretty damn high confluence trade. You could definitely formulate a bias on that. I'm not gonna lie, especially if you can put together an SMT, something like that. You don't really have this major BOS, so I would definitely wait for the SMT, but still, the thoughts there. I want to see this wick, see the exact liquidity it kind of tapped, if it did tap any. Wait, because most of the time when you see a wick this big, it's either news or it's tapping liquidity. But we go little fib here. Nope, definitely not that. Okay, so yeah, it goes right through that 0.79% zone. You could definitely argue that's a liquidity sweep because that's a sensible retracement. Then this equal high here, obviously you can already see it has a good amount of fucking diction. This is a pretty good concept here. I mean, you see the fucking equal high. You also see we're already in an established downtrend, so that's a fucking pretty damn good sign. So, let's see exactly right here. Yeah, I mean that perfectly. You can literally see it perfectly fills the zone 0.79 to 886. And if you're entering specifically off of this candle, it's even higher confluence because you got to think this candle didn't really perfectly fill the zone, but this one established an equal high. We were already in a downtrend, and it retraced directly to this 88.6% retrace. Pretty damn high confluence right there. Now I'm curious to see how these. So actually, no, you don't even. We'll use this entire channel for this one. So this isn't really a very prevalent thing. It's pretty easy, so I'll just include it in this example. But a channel is just when price kind of sticks in a trend, and you draw a trend line like this one, for example, and it respects it multiple times. So from this low to this low, it's respecting it pretty much every single time. So this whole channel, a really good example of it. See a liquidity sweep here. We swept this low, then we went higher. Likely this wick right here probably retraced some sort of liquidity down up here, retracement wise, obviously not a full low or a full high. Okay, so that's the wrong way again. Actually got a lot of sleep last night, so I can't even blame it on the sleep. So yeah, directly to that 79% retrace. Let me go down. then we get sort of an equal low here. Definitely wouldn't fucking formulate a trade off of that, but if you want to do that, you fucking do you. But then right here, we swept this 127% extension. Then we went up. Oh, who would have seen that coming? Fucking anyone. And then same sense with this one. Probably went directly to that shit. Yeah. So it's pretty much it. I mean, we have this was a good video, 20 minutes, and we explained a liquidity sweep, high wick, low wick, and fucking equal highs and equal lows. But yeah, just to recap, liquidity sweep. So a high wick or a low wick can be any of this shit where the wick's just long. And then it's going against the general trend. So like you can see how this low wick leads to high forming, and then this high wick leads to low forming. Same thing can be said about equal highs and equal lows. Generally it will create, if you get a high wick, it'll generally create a low. If you get a low wick, it'll generally create a high. If you get equal highs, generally will create a low, and then equal lows will generally create a high. Same thing with liquidity sweeps. It's just a question of how much bias is really behind that move. So like how low and how high is market going to move off of that. So yeah, there's like that. And then liquidity sweep is a high wick or a low wick that goes into a position that makes sense. So either some sort of high, some sort of low. Those are probably the strongest biases you can make. Some sort of Fibonacci retracement that makes sense, or some sort of Fibonacci extension that makes sense. And then an equal high or an equal low is just 2 points in market, whether it's the wicks or the actual candle body, where it's the same exact point, 2 or more points, where it's the same exact part of market that it hits. And then, yeah, like everything else, obviously, if it's in market context, we'll teach about fair value gaps, order blocks, fair value gaps tomorrow, order blocks the day after. But if a liquidity sweep or a high wick, low wick, or even an equal high, equal low falls into market context, so like a Fibonacci retracement, an order block, a fair value gap, like even a high, low, if it falls into that context, then it's a lot more of a higher probability trade you could really take. I personally, in my trading, I like to go mainly off of Fibonacci retracements and order blocks, or fair value gaps, just some sort of liquidity, and then I'll just use it as a higher kind of confluence. I typically won't trade off of that alone. I like using a micro BOS and then individual candle structure plus the liquidity sweep, equal high, equal low, fucking high wick, low wick type of thing. I like to use that. But I mean, to be quite honest, my strategy works pretty damn good, and I'm using a lot of different concepts in it. We will definitely, if you can't understand it based off these videos, I'll definitely just put up a course, which is just going to be like a 6-hour video or something like that, maybe shorter or longer. I have no fucking clue, but it's probably going to be pricey, I'm not going to lie, but you got to think, if you learn this shit, and every course I release, and every time someone enters the Discord, the first thing that you're going to get is an hour-long video, maybe shorter or longer. I haven't recorded it yet, but it's going to explain how to set up a paper trading account exactly the way I do, how to set up your FTMO, so that's your prop firm for a funded account, how to set up your MetaTrader 5, that's the software that I take trades off of, how to set up your Oanda account, which that's the actual brokerage I use. All of that will be explained, how to do all of that, because can't really trade if you don't have that shit set up. All my settings for these platforms will be in that video. And then after that video's there, we'll have the course videos, and with the course videos, it's basically gonna we won't use any of my 3 minor strategies I used. We'll just keep it short here. I'll give a dedicated video to each different course, but just for like my actual trading thing, I'm gonna list every single like thing I use to figure out market context, where market I think is likely gonna move, every single different combination of entry confirmations and shit that I use, and then every exit strategy, every way I exit that trade. And then after that, we'll literally just do a shit ton of examples of me using it to really get it like ingrained in your brain after I explain the actual strategy, like what makes it up, every single different tool I'll explain. So I'll explain fair value gaps, once again, order blocks in more detail. And like I said, it's just going to be every single bit of the strategy. It's going to be explained, and then a fuck ton of examples. Realistically, my goal is to have a few hours of examples just up there so that you can literally sit and watch every single example. And the goal is for me to outlast you. So to a certain point where it finally clicks, like in your head, and it all makes sense, then you can just click off the video, whether there's 20 minutes of examples left, 30 minutes. The point is for me to give you enough context and content to where you don't need all of it, and you can just click off eventually and start trading on your own. But it'll have that, and then if you make it all the way to the end of the video, all of the examples, and you still don't understand it, then I'll literally leave my personal email in it, and you can email me literally any question you want, or if you just join the Discord, you can ask me there. Any of that shit. The point of this whole like Emerald Networks and all of this is just to make every single person that actually isn't a pussy and will actually work hard and is kind of like-minded to me. The goal is to make you into a profitable trader and make you fucking filthy rich. That's the goal of it all. So I will put in, as long as y'all will put in the time and actually put in the time, effort, work to learn this shit, I have no problem teaching you, no matter how long it takes. But that's about it. Big things to come. Get fucking ready. If you want to learn it off the videos, great. I get monetization for that. If you want to it's not clicking, you want to join the course, great. Fucking, no matter what though, if you're taking every single pathway I give you, you will get fucking rich. And that's a personal promise. But y'all have a good one, and this is over.